What does it mean when a company brings their quarterly earnings conference call forward? Why would a company do that? Yeah. That's very rare. So let me take a step back and talk about conference calls with companies that are publicly traded. So companies that report earnings, and they report 4 times a year, every 3 months, okay? Quarterly earnings. A lot of them, when they report earnings, when the press release comes out after hours, usually after the market's close, they'll hold a conference call, which is usually about 45 minutes long. And in the conference call, in the first 15 minutes or so, the management team, meaning investor relations, CEO and CFO, the management team will read a script. And they usually start off the script with, we had another amazing quarter, even if it wasn't amazing. It's true. It is what it is. Then what they do is they take questions from Wall Street analysts that work at big firms like Goldman Sachs, Morgan Stanley, Morgan Haroun Sachs, MHS, etc. Kidding about that last part, of course. But they'll take questions and from the street. And the analysts ask great questions that we all want to know. And you can take my complete financial analyst course or my MBA degree program for even more details on how the whole process works. Now, when a company issues a press release, they issue a press release beforehand to tell you what day the earnings are going to be on, okay? Meaning the earnings call. When they issue that press release to say, here's the date we're going to be holding this conference call and releasing earnings, that means they're not going to miss earnings. Sometimes you'll see stocks go up for weird reasons and everyone thinks they're going to miss earnings, and they set a press release saying we're going to release earnings at this point and do a conference call in the future. That means they made earnings. And sometimes they'll positively announce, pre-announce, or negatively pre-announce as well. Yeah. In terms of pulling forward the call, it's very, very rare that I've seen that done before. Yeah. And usually it might be if certain news is just about to leak. Maybe the New York Times or Wall Street Journal got access to something and they're about to release it in the news. And the company wants to front run that before that news comes out. Anyway, and sometimes they hold an earnings call earlier because of that, because they found out about a big deal, right? So a lot of times when companies get acquired or make a big acquisition, if the press finds out about it and the company finds out the press is about to leak it, they might front run that, put out a press release themselves, or do an earnings call earlier than expected.